You place your order, your position is open, but your attached stop-loss order never made it to the exchange. You see price spike, and before you know what happened, your account is liquidated. All within 5 seconds. Sounds scary? That's exactly what happened to me until I learned about this one hidden detail. This is the hidden risk most scalpers don't even know they're taking, and in this video I'll show you how to avoid it. For future scalping, in comparison to slower paced trading, you need some extra tools: data provider, order router, scalping grade execution platform, and possibly a capable order flow visualization platform. Picking those can be confusing, so I've made an overview for you with exact recommendations on which is best for you. At Wealth Academy, I focus on quick, data-driven methods to improve your trading. Now, let's get started. Now, which data provider should you pick? Usually, you cannot subscribe directly to a data provider. Instead, you go through your broker or your prop firm, since each of them offers different providers under the hood. Rithmic is the choice if you want the least aggregation and the highest fidelity. It is lightweight and has very low latency. But there's a catch. Because of the way it's built, it really only works well if your internet is pristine, meaning a wired gigabit connection. DxFeed is different. You can buy it directly, independent of your broker, as long as your platform supports their adapter. Because DxFeed uses batching, freezes are less likely but still occasionally happen. The trade-off is lower tick fidelity. Sub-millisecond order sequencing may not be preserved in the same way as with Rithmic. Then there's CQG, sometimes called Continuum. It focuses on robustness for retail traders. Even if your internet isn't perfect, CQG keeps the data flowing without chart gaps or pauses. The downside is the micro-batching. It smoothes the data, but you lose the absolute tick-by-tick fidelity. So if you have pristine internet, go with Rithmic. Otherwise, pick CQG to avoid freezes. And if broker independence is important, DxFeed is the option. Now let's talk about order routing, from the user to the exchange. Here's the problem. You send a limit order. The platform waits for the fill confirmation before sending your stop loss and take profit orders. In that time window, you are exposed to unlimited risk. If price has already moved past your stop or target level, those child orders may never even make it to the exchange. This is how rejected children and orphaned legs occur. The solution is to use a proper execution platform, one that bundles your parent and OCOs together and sends them as a package. Many traders separate charting from execution, for example, using ATES for visualization and NinjaTrader for order handling. As long as the execution platform bundles the orders correctly, you are protected. Platforms that do this well include NinjaTrader, SierraChart, and MotiveWave. Now about routers. They get your orders from your trading platform to the exchange. Rithmic holds OCOs in the cloud until the parent is filled, then releases them to the exchange. CQG works in a similar way, though its routing is a little bit heavier and slightly higher latency. Teton is different. With SierraChart and Teton, the limit order and OCOs are bundled and sent directly to the exchange. The children sit contingent at the exchange itself, and the moment the parent fills, they go live immediately. No extra handoff step is needed. That's why Teton is considered professional-grade routing, though it is exclusive to SierraChart. If you watched this far, that probably means I could provide some value for you. If so, feel free to give the video a like so others have it easier finding it as well. I'm making videos on how to become a successful day trader using data-driven and proven methods. So if that interests you, consider subscribing for more. Thank you for your attention and see you next time. Bye.